He's bold, he's brutal, and he tells it like it is. I want to welcome to the show Nathan Latka.
Matthew, thank you for having me, man. It was good connecting in Montreal. I think that was just 1 or 2 weeks ago, right? Or no, a few days ago maybe.
It was actually last week, man.
Last week. Time flies. We're having fun. But hey, I am a numbers guy. I'm bold as hell. I hope you ask me questions that make me super uncomfortable. It'll be a lot of fun. I will tell you, though, in your intro, the podcast is doing very well. It's not ranked #1 currently in business, but it is the fastest growing. So I've showed the data to a lot of the top podcasters, and they go, Nathan, we've never seen a show go from nothing to 2 million downloads so fast, right? So something special is happening. People are listening. And Matthew, you said you're listening, right? Why are you listening?
Because you're bold and brutal, man. I'm telling you, I love how direct you are. I love how you get to the core of the entrepreneurs and finding out really what makes them tick, their revenues, their numbers, their profitability, what's happening in their business, and challenging people on the show live. That's pretty stuff you don't actually hear in most podcasts ever.
Yeah. Too many people, they do these episodes, they do these shows, and they just lie about it. People, they call themselves millionaires online, and they do these shows. They just don't tell the truth. So I said, you know what? I don't give a damn about the guest. They're going to come on my show. I'm going to beat the hell out of them. They're going to give me all their revenue data, stuff they don't share anywhere else, and then it's going to be great. Now, here's the caveat with that. Other podcast hosts like you then have me on their show, and they go, okay, I'm going to give Nathan a taste of his own medicine, right? And my interview, the interest in my interviews when other people are interviewing me has gone up significantly since everyone knows my style, right? They try and just hit me hard. So it's fun. It'll be fun.
Well, I'm going to come in a little bit soft, and I'm going to come in hard. So I'm going to kind of work you on both angles.
Right, good.
Because, one thing people don't get about you very much is the soft side of you, because all they hear is the hard, boldness side of you, which, is Nathan Latka. But I'm going to have a little bit of soft Canadian style in there with you, too.
Listen, this is like a disadvantage. I don't want people to think that I care about small animals and babies, right? I want tough. Because look, I'm probably going to negotiate with them at some point for a business deal. I want a great deal. So I think it's a disadvantage to be seen as soft and caring, but who knows? You met me in person. You kind of know it. You kind of know me now a little bit better. You kind of peeled back the onion and know I do have a soft side.
And that's, that's totally cool, man, because we're going to go from both angles. And I'm going to ask you about your revenue numbers. I'm going to ask you other couple questions as well. But the first thing I want to ask you right now, Nathan, what is the most exciting part in your life? Now that you've sold your company, what right now are you working on?
So right now, my biggest asset is time, being so young. Every additional bit of knowledge I can accumulate now basically has an 80 or 90-year payback period. So right now, I am focused on increasing my learning velocity. The podcast is critical to that, obviously, right? Because I'm basically getting revenue numbers from a different business, from a different entrepreneur every day. So my biggest thing right now that I'm focused on and that I'm enjoying is increasing my learning velocity. In fact, I don't know if I've ever been on another interview where if you combine the two screens, we have well over probably 200 books. So that's impressive. But I'm doing a lot of reading as well.
Well, I know you're focused on winning, so I think I have more books than you there, Nathan.
We'll see. I don't know about that. I got stacks on the floor over here.
I'm just bugging you. Okay, so now where are you actually born and from? Omaha,
so
right?
I was born and raised. No, I go to Omaha a lot for Warren Buffett shareholder meetings, but I was born and raised in Northern Virginia, Loudoun County.
Okay, got it. And growing up, I remember you telling me when we were actually sitting down for coffee, you said that from an early age, your parents, your mom was more on the savvy business side, but your dad was more of the hard-nosed, hard-working, bulldozing, going to work and get it done kind of guy.
Yeah, he was a coal miner for a long, long time. And then he went into the United States Postal Service before retiring. Yeah. Now, the gap between my parents is big. My dad is, I think, 76 now. My mom is 21 years younger. So, right. So that's for me, that would be the person I marry just now being born, basically. Wow. Right? Kind of weird to think about. But that book, Rich Dad, Poor Dad?
Yep.
I felt like I actually, when I was reading that book, I was like, wow, this is interesting. Because I had my dad who was put money under the mattress, never spend money, scared about banks, all this stuff. My mom is buying business, trying to buy a real estate business, and she's doing pharmaceutical consulting. And so I always had that kind of dialogue at the kitchen counter or at, whenever. And I think that probably had a big impact on me subconsciously when I was younger.
So you got all your business stuff mostly from your mom, right?
I mean, it's hard to say definitively yes, but I would say yes.
Got it. Cool. So growing up,
but work ethic, but knowledge isn't anything if you don't have work ethic to put behind it. Right?
That's
There's a lot of smart people that I beat the hell out of because they don't work as hard as me. And then on the other side, there's a lot of people way dumber than me that sometimes beat me at things because they work way harder, right? They spend more time executing, right? They work 18-hour days and don't sleep at all. That's fine. If that's what you have to do to beat me, do it. But my point is you have to have both. Like, you want a mix of both.
Yeah. Now, define for me hard work in your eyes. Is that going to be like having an impeccable team? Is that you working 18 hours a day? Is that you delegating the right tasks? Define what hard work, because some guys think put their head down and work nonstop, but they get freaking nowhere in life. So define what hard work actually is for Nathan Latka.
Well, most people are obsessed with telling everyone else they work hard, right? Mm-hmm. That's the problem. And they feel like they can't tell everyone else they work hard unless they go in and they sit down in their cubicle before everybody else and they leave that cubicle after everyone else has left. Then they can say they're hardworking. Yeah, right? For me, what hardworking means is it's a division. It's a division equation, right? Dollars per minute worked, right? Dollars per minute doing anything else than something like where your brain's turned off, like laying by the pool or going on vacation or doing what you want, right? The interesting thing that happens, though, is once you find yourself doing something that you enjoy, like, for example, when I was in Punta Cana in Dominican Republic several weeks ago and I'm laying there on the beach, many people would say, yeah, that's amazing. That's not working. Mm-hmm. But what's interesting is as you sit there and you like watch the waves hit the sand, right? You're like, oh, you know what? That's something really powerful about the water on Earth is that water's way less dense than the sand it's hitting, but it keeps hitting the sand over and over consistently. They break down to little pebbles. Like, there's a business lesson there, right? So like what happens is your mind starts pulling like business out of everything you come in contact with. So you're always working, but you're actually really enjoying life.
And that's funny you mentioned that, because when I first asked you in the interview, when we were sitting down for coffee there in Montreal, about, hey, do you have any people like in your life, like friendships that you've ever had? And you kind of answered back and said, well, not really. And, it's funny because now I'm kind of getting the drift on you, Nathan, that maybe it's all business transactional here. I gotta put you on the spot, man.
I am a transactional guy. I'm a capitalist. I don't really like humans, to be honest with you. I think they're irrational. They're hard to motivate. It's a lot of work. I'd rather work with a big team of robots. All of that's 100% true.
There you go, guys. Bold as it is. Bold and brutal. And he's got a big book coming out next year, right, Nathan?
I do, and you have all this inside information because we had a one-on-one, so I'm not going to talk more about it, but I will tell you it will be a business best-selling New York Times, not these fake Amazon rankings, New York Times, Wall Street Journal. It will be #1. It's going to be a book like you've never seen before. You
heard it, guys, on the Peak Mindset Show with Nathan Latka from the top. This is the first one. Do not forget that, guys. Okay, I'm going to go on your business side. How much did you sell the company for?
So Hale, let's just go in. I don't know if your audience knows a lot about Hale, but Hale.com was my first business. Matt, we get a lot of these people that are like coaches and stuff, but they don't have any real business to talk about. Mm-hmm. This was something I dropped out of school at 19, pre-sold $80,000 worth of Facebook fan pages, built it into a monthly recurring platform and a software technology stack, grew it to about $30K per month in monthly recurring revenue, raised $550K on a convertible note, which had 8% interest, 25% discount, $5 million pre-money valuation from some of the world's top angels like David Cohen at Techstars, Dave McClure at 500 Startups. I mean, the smartest. We then grew it to about $90K in monthly recurring revenue 2 years later, raised $2 million from a Forbes Billionaire, which, by the way, I got that billionaire to respond to me using a cold email. And it's just one button. The button people always ask me about, Mathew, so I tell them, you can get it at nathanlatka.com/send later. It's a free tool, very powerful. But got $2 million there. We then kept growing it to $5 million in total revenue. And in February this year, 2016, we sold it to our #1 competitor called Vodago. So that's like the 4 or 5 years of my beginning entrepreneurial journey in like 60 seconds. Is that fair?
That's fair. But you said 2.5 million though. 2.5 by age 19. You said only 2 million there.
Well, because total 2.5 million raised.
Got it. Okay, thanks.
We did $500K on a convertible note, right, with the terms that I mentioned. Then we did another $2 million from this Forbes Billionaire, which was called our Series A round of funding. So typically, when you're raising funding, you do seed, Series A, Series B, Series C, etc. That Series A round of funding that we did, that was an $8.5 million pre-money valuation. Right, and a $10.5 million post-money valuation. The reason that's important is because if you have 10% equity, right, in a $10 million business, you do the math on what that's worth. Okay. So I'm not. Let me get back to your question, because people are going, "Oh, Nathan's dancing. We can hear he's like doing the tango right now." I'm not dancing. So here's what happened. We were going to shut the business down. The part of the business that was underperforming, in other words, it was growing but not as fast as we wanted, we were going to shut down. I sent an email out to all these people, Hootsuite, all these people that were in the social media marketing space, and basically said, hey, before we shut it down, do you want to buy it? I got a bunch of letters of intent back. Those are called LOIs. I got them to bid each other up by simply asking, yes or no, is this your best offer? It was via email. I've never used, Mathew, 4 words to create so much money before. Because it worked once, they doubled their offer. I'm like, fuck, I should say it again. So I said, is this your best offer? 2 of them out of the 7 doubled it again. So one of those companies was Vodago. They bought it, and I cannot, because I'm an NDA, I cannot reveal the actual sale price, but I can give you enough clues where you can maybe back into it. So SaaS companies, software as a service companies, typically sell based off a multiple of their top line, forward-looking, annualized revenue.
Okay.
Right? So if you're doing $1 per month in revenue, multiply times 12 months, that's 12. And the multiple that we got was 11x. So 12 times 11, or about 140 or 150. That's kind of how you kind of do the math from there.
Now, how much did you actually own of your company, Hale? Ownership.
So when I first, and Mathew, are you still getting good audio quality on your end?
Yes, I am. Yeah.
Okay, good. So when I first launched the business, I pre-sold 80 grand worth of or 70 to 80 grand worth of these fan pages. I didn't have any technical co-founders, so I needed co-founders. This is where I gave a big chunk of equity up. But I didn't want to lose leverage. So I created the Virginia Tech Entrepreneurship Club to secretly kind of interview developers, the ones that came to the meetings I knew were probably very entrepreneurial. So one day, the 3rd or 4th meeting, I said, hey guys, I've got a business. I have 80 grand in pre-sales. I need a developer. I'm going to give up 40% equity. Whoever raises their hand first gets it, right? 2 of them raised their hands. I said, you guys figure out how to split the 40%. They did it. They did it 2020. Biggest mistake of my life, but I gave up 40% of the business. All right, so I'm down to 60% now. We can talk about why that was a big mistake. But long story short is I didn't know my co-founders. I turned this into a huge multi-million-dollar business. They lasted like 2 days, okay? They lasted like very short amount of time. When we did the series, when we did the convertible note, which was 500 grand, adding $5 million cap, you're not actually valuing the company, so you're not actually giving up equity at that point, but debt goes on to your balance sheet. So debt to the tune of $500K that accumulated interest at 8% over time. When we did then 2 years later the Series A valuation, that was actually me giving up equity, right? So you can do the math. If it was valued at $8 million, the business, we sold $2 million, right? Because that's how much we raised. How much of the business move up?
Sorry, you cut out there, Nathan. Go ahead.
Yeah, so if the business was worth $8 million or pre-money valuation, and we raised $2 million, how much did we give up?
6.
Right, about 20%.
20%. Oh, okay, got it.
20%.
Got it.
So right, $2 million. So now our post-money valuation is about $10.5 million. $2 million of that is equity from that investor round, right? So that's about 20%.
Got it. Okay.
Does that make sense?
Makes sense. Yeah, I gotcha. Yeah. The audio quality was about. Yeah. Go ahead.
Well, I was going to say that 20% that we give to investors then dilutes the 60% that I still own and the 40% that my other co-founders had. So now I'm down to call it, 47, 48-ish, right? Then we had a little unallocated equity pool for employees, call it 10%. So now I'm down to like 40-ish%. So that gives you a sense of kind of how much of the business I owned when I sold it. Gotcha.
But right now you own nothing, have nothing to do with Hale anymore as far as now. It's all done, right?
No. Sold it. Yep. But the cool thing is Heyo.com, if you go there, the company that bought it is using it as a core. I mean, it's a core piece of their business now. So it's still live. It's still going. My customers are happy, but I have nothing to do with it.
Awesome. Okay, so now, you normally talk about all the things that are successful in your life, the wealth you've accumulated, the business that you've grown. I want to hear a challenge, and you want to be vulnerable here for a moment. I know, express a challenge.
I hate this damn question. Failure question, the challenge question.
Not a failure. I want to hear more of a challenge for an opportunity, something you had to go through that actually overcame, that made you stronger and better and even more successful as you are today. So can you look back and tell us something you turned around that was a challenge, that not a failure, a challenge that made you as a success now as in your life?
Well, the reason I hate these questions because they happen like every day, but like I just don't think of them as like, if I didn't have challenges, I'd be bored as hell, right? So like a challenge might have been getting my first pre-sale, right? Getting my first $700 sale. How'd I get over that? Well, I spent many days cold calling people online on Facebook and finally got a sale closed. A challenge could have been, how did I get the $2 million raised? Well, I had to send 4 or 5 cold emails to this billionaire and then finally use this one button that I keep referencing, which people can check out at nathanlatka.com/send later. That was like a difficult challenge, right? So Matthew, it's hard. I mean, here, let me ask you a question, then I'll answer this one differently. What do you think? Like, what area are most of your listeners in right now? Are they trying to raise capital? Are they trying to get their first sale? And I can tell you the challenge I had around that area and how I overcame it.
Building their business.
Okay, do most of them already have revenue, or they're pre-revenue?
They already have revenue.
Okay, so what is their challenge? Getting more customers, getting more revenue, making their first hire, raising capital?
Their change will be like building their business and growing their revenue and trying to really, basically increase say they're in their first year of their business right now as new entrepreneurs in fitness in the industry. How to grow their business. Yep. So those, right now, for example, their challenge could be or would be facing not enough clients in their business, not enough revenue to support their business right now. They're in the red. Okay, so how do they turn that around?
So I will give you some unconventional advice here. This is just my personal perspective. Your audience can choose to listen to it or not, but it's my perspective. You have more control over controlling your expenses than trying to get new revenue. Right? The reason I say that is it's actually usually better if you're trying to increase profitability specifically. It's way easier in most cases to figure out where you can cut expenses versus how you can drive more revenue. And so one of the metrics that I always look at, when you go to these networking events, Matthew, one of the first questions they go, "Hey, I'm John. I have my own startup." And they go, "Nathan, so how big is your company? How many employees do you have?" And I want to look at them and go, "Screw you. What's your revenue per employee?" Right? Because if my team's only one big, but I'm doing $1 million in profitability for one employee, and you have 20 people, but you're doing $2 per employee, okay, I'm way more profitable than you. I could buy your whole company if I wanted to. So what I would tell your audience is figure out how to limit your expenses and get your team to help you do that. Show them the financials. Say, "Guys, look, we're in the red. We must cut X amount this month. What do we cut?" And they have to believe it, by the way, because one thing that you'll always see happen is when your back is truly against the wall, you'll figure out what costs to cut. If people don't really believe your back's against the wall, they're going to bullshit you.
That's a good point. And one thing about Nathan that actually kind of surprised me, guys, when I met him there last week is I was expecting when I met Nathan, because obviously he's got a little bit of capital in his back end there, is he'd be at this nice hotel in downtown Montreal. And I'm like, where the heck is this guy? So I'm walking down the street and I'm freaking in this area I've never been to in Montreal. Like I've been in most parts of Montreal.
And construction everywhere.
Oh, and I'm like, am I in the right place? And I'm texting him like, where the heck are you? Are you like in this, are you in this bed and breakfast over here? Are you in this restaurant? I'm like, no, I'm in this hostel area somewhere. So I went to this hostel place, and it was a nice place. It was, it was good. It was okay. But I'm like, am I really in the right place? And I asked the front desk. I was like, yeah, Nathan Latka's here, and I'm like, okay. So I meet him, and the guy's, a down-to-earth, go-getting kind of guy, but you'd never expect it. So you can definitely live a lifestyle, Nathan, that is very unique and smart. I'm going to say very smart and efficient. And obviously you learned that from years of business, correct?
Well, so my life is very simple. I don't like owning stuff because I feel like it weighs me down. I have no problem, though, buying very luxurious experiences that most people just couldn't afford. But I don't want to. I'll buy the week on a yacht. I don't want to own the yacht. That's like $1 million a year just in maintenance, right? That's like a yacht that I have to worry about. I don't want the yacht. I want the experience of being on the yacht, right, for a week. And guess what? What's funny is usually after you're on it a week, you're then bored. It's like a Christmas present. And you're like, thank God I didn't buy this thing in the first place, right? So I love buying experiences, but you are exactly right. In terms of my monthly expenses, they are probably lower. I mean, they're lower than 99%. That's the interesting thing about the 1%. Most of their living expenses are less than 99% of the other people, right? That's why they're 1%. It very rarely is it actually tied to revenue because expenses compound over time, and weak people tend to increase their expenses as their revenue increases, so they never have any margin to play with. Brilliant people maximize the delta between their expenses and their revenue, and it's not just how do I make more money, it's how do I spend less.
That is a brilliant way to put it, Nathan. That's actually a very, very important lesson, guys, on the show is really listen to Nathan on that end, guys, and pay attention to your expenses big time. So here's something I'm going to dive into regarding one of your...
I'll real quickly just to tell people, give them actually numbers. I mean, that hostel that I was staying in, there was a business reason I was staying there, but the cost per night was $18.
Yeah, US, right?
I don't think you could have stayed. Yeah, it was $18 US. I don't think you could have stayed. It was a central location in Montreal. It was old Montreal, basically, which they're repairing right now before the anniversary next year. But central location, free breakfast, amazing building, very cool, very hip. I stayed there for one reason is I'm investing in hostels right now. I think hostels are the future because I, as a millennial and someone who's single, with no kids, I don't want to sign leases that keep me in a city for 12 months. I want to just buy a membership to a site like an Airbnb and be able to stay at any hostel in the world any night I want, and be able to travel and move freely. So I'm building a network of these hostels right now to ideally beat Airbnb, beat beat WeWork's We Live concept, and win. So that's another reason I did it.
So one thing I also noticed about you too is, you're obviously very avid in investing into real estate, and a lot of listeners here who make actually a decent amount of income and do like to invest. How do you manage all of what you do on the investment side? Do you have people that do stuff for you, or do your real estate planning for you as something like I would do or someone else would do? What's your process for that? Because you're investing all over the place, Nathan.
Yeah, I just look for opportunities that hit me like during my normal life, right? So like I first just decided to stay at a hostel, right? Just to figure out what it was like. And then I'm like, oh my gosh, the business model here is very interesting. And then I met someone that owned a hostel in Austin. I bought into the business. Then I got their profit and loss statement, their balance sheet, which I could analyze and get that information. I realized, oh my gosh, this is unbelievable. So like I only like investing in things that I'm very familiar with, that are part of my life kind of already, if that makes sense. Where people get in trouble is where they invest in things they don't know because a friend said it was amazing, or they read a Wall Street Journal article that said you should invest in Apple, so they invest in Apple and lose everything.
Got it.
Just invest in things that you know, and especially invest where what you know is different from the masses, because the masses in the world are broke. So the only way you can get rich is by thinking not what masses are thinking. So why the hell would you listen to a press release, right? Or what your friend says? You have to have your own original thoughts.
I love that. So two more things I want to ask you before you go into the peak 5 questions. First off, as you told me, I asked, what's your vision in the next few years to come? And you said billionaire by age 35. Okay, so what's your plan?
Yeah, so the critical piece of this plan is what I call waterfall investing. If I give everyone right now listening $1, people would do all kinds of things with $1. Maybe some of you would go to a gas station and buy a Slim Jim, right? Some of you might waste it on something. Maybe some of you guys have expenses. You have a kid, so you spend it on the kid to go to soccer practice, whatever. Maybe some of you have a mortgage you have to pay, whatever. For me, 80 cents on that dollar is going into an investment, right? And that 80 cents is split. I'll give you the math equation. That 80 cents is split the following ways. Okay, about 25% goes into domestic stocks that are passive. It's a Vanguard 500 S&P index with very, very low expense ratios. Okay, so my money compounds. That's 20% of the 80 cents that's left. Another 10% goes to foreign emerging markets. 15% goes to foreign developed markets. Again, these are all mutual funds that are low expense ratios on Vanguard. They just mimic the S&P ideally. Another 20%, so 20% of that 80 cents goes into my real estate fund. As that real estate fund grows, I'll then do another deal with that money, right? And then I need to hedge inflation. So I put a percentage of the 80 cents into Treasury inflation protected stocks and Treasury bonds, which are unsexy, right, in a normal economy, but very sexy when the economy goes, belly up, right? So that's how it's a rule. Like, I don't even think about it. It's just a rule. So the reason I bring that up is the way I get to be a billionaire is, first off, I just have a smarter waterfall than 99% of the world. I mean, when you look at other 26-year-olds, they're not thinking like this. I mean, people have said, Nathan, you're like the smartest 26-year-old I've seen. I was like, okay, I'm not going to argue, right? I'm going to take a compliment. Thank you. But that waterfall is critical. And by the way, Matthew, that waterfall compounds with time. So the fact that I'm so young, it's great. This still works if you're 40 or 50 or 60 even, but the waterfall works with time. And so what happens is the math equation I just gave you was only for that initial dollar we earned. Well, what happens is those individual channels, real estate, bonds, etc., they then create their own new dollars. And where it gets really fascinating is when you start putting equations around how to use the dollars that your passive investments are making for you. And that's where you start to create a waterfall. And that's how I'm going to be a billionaire by the time I turn 35.
You guys heard it, guys, on the show once again. First time ever on the show there, Nathan?
First time, yep.
So that's the second first timer on the Peak Mindset show. Nathan Latka, billionaire. I'll be having you on the show in the next 9 years again. I'll be hearing the billionaire on the show next time there, Nathan. You got that right.
Yeah,
right.
Let's do it. It'll be fun. Part of the advantage I have is just I see more than anybody else with the podcast that I've got. It's called The Top Entrepreneurs, and I get all that revenue data, Matthew. As you know, my learning velocity is really high. So tell us what your actual expenses are personally per month. I'm curious, really curious to hear this. So yeah, my personal expenses per month are about $1,900.
That's it.
Yeah, and the majority of that goes towards the place that I'm renting here in Austin, Texas. About 1,400 of it.
Guys, that's insane. You guys heard it from Nathan. That's pretty dang good. That's impressive.
Yeah,
Okay.
I would say, look, tweet to me, guys. I imagine my expenses are lower than yours. Now, some of you are going to go, yeah, but Nathan doesn't have kids, and Nathan doesn't have a spouse. He doesn't have dogs to buy dog food for. Well, like, no offense, but that was your choice to care about another human and marry them and pump out babies. Like, that's your freaking choice, okay?
This guy is freaking bold as heck over here, man.
It's true. It's a choice.
So, women, if you're listening to Nathan Latka right now, do not date him. He probably won't take you for dinner. He'll probably take you to some hostel and give you a $10 McDonald's meal.
No, you can bet your life that I'll break up with you before Valentine's Day or Christmas because I'm cheap as hell and I don't want to buy a gift. Okay.
There you go, guys. Don't date Nathan Latka. There's a relationship cue for you. Okay, perfect. So going into the peak 5 question, Nathan, you ready to rock and roll? Peak 5?
Let's rock and roll.
Do you have a coach or mentor right now?
No. What I do is I turn to biographies and books that people have written. Ideally, somebody else has written about them. I study the biographies. Then I put those things into practice in my daily life. I don't like coaches. I think coaches are weak. If they were really good at coaching what they taught about, they would just do what they're teaching and make a lot of money that way.
Got it. With a mentor, though, have you actually had a mentor before, though, when you were starting your career? No?
Not in the sense where like I go hire some name online and pay them $4,000 a month to coach me. What I do is when I meet someone that impresses me, I say, Mathew, you've impressed me. Monthly, I send out a monthly update to all the people that I really respect. It's less than 500 characters. Can I add you to that list? Most people say yes. I send out that monthly kind of update, which is very transparent into all my revenue data. And those people then give me feedback, right? So it's a curated list of billionaires, people that I know, advisors. They give me feedback, and I guess maybe that's my mentor.
Got it. Makes sense. Number 2, what's your most influential book you've read? You only got to pick one.
Oh, Jesus, Lord.
Influential, not favorite. Influential.
Yeah, I would say the most influential one I would say is Unconventional Success by David Swensen. He runs the Yale Endowment, and he's who helped me create the Waterfall investment strategy I just articulated to you.
Gotcha. Number 3, what is your most influential quote?
By the way, I wish I wasn't influential. I wish nobody knew about me, right? Because then they're going to copy me and compete with me. But I would say, one of the things is, momentum is always king. Mm-hmm. Manage your life's momentum. Another one is, I say all the time, is hesitation's the enemy of hustle. Like, just start. And then the last thing, which is more of a piece of advice, a lot of people don't start ideas because they think they're copying a competitor or they think it's not a new idea. And I do the exact opposite. I see something that I'm like, wow, that's working. And then I figure out how to own a part of the idea. How do I get on the cap table? How do I own equity? I want to own the idea, not create the idea. So copy the hell out of competitors and then out execute them. Okay.
Number 4, if you could tell your 20-year-old self one thing, what would that be? So look at yourself 6 years ago.
It just would have been to start faster, like get my learning velocity going quicker, and also to save more. I was spending even what I'm spending today when I have way more wealth. I was spending more actually back then when I was a college student than I am now.
Interesting. Number 5, if there were no limits at all, financially of any kind, what would you contribute to in the world?
I hate this. I'm not I don't give to charity. I'm not like some philosopher. I don't like contributing to the world, generally speaking. I think there's a lot messed up with the world. I think I'm probably one of the smarter people in the world. So what I like to do is build ideas and then put people into those ideas that naturally align with those ideas. That's my contribution to the world.
He is so cold, eh, guys? Wow, what a guy!
You
won't even support a charity. Oh man!
But I gave you an unbelievable hug when we met. Okay, it was a great hug.
Oh yeah, he did. A really good hug, actually. And it was he took had a pretty good conversation. He actually has a heart. He has a little bit of a heart. It's not too bad. It's not too cold.
Don't stop telling people that, Mathew. Stop.
Exactly. All right, guys. What is your definition? If you had a definition for Nathan Latka, what's your definition of mindset in your eyes?
Go.
Okay. Okay.
Go.
Perfect.
Like, even if you don't know what the hell is, and look, an example of this, Matthew, just so people can understand what I'm saying. I wanted to buy Success Magazine because I went to their website one day and I said, this is shit, right? And I wanted to own a media company. So I just publicly wrote an LOI, a letter of intent. I want to buy it, $5 million, sent it to the CEO, put it out on a bunch of press outlets. I had no idea how I was actually going to get the deal done. The action of doing that, just doing it, just putting that out there, people reached out and said, I used to work at Success. I'd love to work with you. I'd love to tell you what's working. Other people said, Nathan, I was about to cancel my Success Magazine subscription, but if you're going to own it, I'll keep buying it. I took a screenshot of that, sent it to the CEO, said, see, you should sell me, right? So like by just creating momentum and just going, it actually helps the world will help you get what you want.
Okay, I got to ask you a question. If you actually bought Success Magazine today, what's the first thing you would change?
Immediately, the first thing that I would change is the website. Again, if anyone goes to the website, I mean, Mathew, they're selling CDs on their website. When was the last time you bought a CD?
Oh my gosh, 3 years ago? 4 years ago?
Like, what are they thinking? I mean, it just blows my mind. What they've done is they've established relationships with a lot of these kind of old-time thought leaders, which they're great, okay, but like they're going to die soon, right? Jim Rohn, like these older people, right? Great guys, I learned a lot from them, but like they're doing, in my opinion, they're just doing it the wrong way. I think, they're lacking. They only get 2 million unique website views per month, while Fast Company and Inc., they get 20, 30 million. So I changed the website immediately. And then look, the stories in Success Magazine, I think, are too fluffy duffy. It's like, do what you love and the money will follow. Like, mine would be way more numbers driven, way more data driven, and where a philosophical quote fit in with the data, I would add those kinds of things, not the other way around.
Well, then why the heck can you start your own magazine right now? Get your own magazine going.
So that's probably what I'm going to do, right? Success Magazine said no. They did it publicly. It was not good. Entrepreneur.com wrote a big hit piece on me, but that's a whole other story. I'll probably launch my own magazine. I'll make it big. It'll be successful. It'll be as successful as Forbes, if not more successful. I don't know if I'm going to call it The Top or Latka or what I'm going to do, but I'll probably start a magazine.
I'll write for you.
There you go. Boom. Done. Author number 1.
There you go. Perfect. Done deal. So last one I want to ask you, because I didn't get this question at the beginning, is how do you manage your people? Because you told me you don't like micromanaging people at all. So how do you actually delegate and manage your team?
So very simple. I make sure there's no emotional bond, right? So like the best way, like in my opinion, a lot of people say like you have to hire a team and then you have to like care about them personally and you have to like massage them and like rock them in your arms and like give them milk and feed. Like, no. What I do is I go somewhere where there's no emotional connection. So Upwork, a freelancing site. I literally find someone, like a nice little face picture, and they do JavaScript or whatever. I hire them. That allows me to be direct and blunt and not really care about the person. I know that sounds weird, but it's way more efficient. I mean, you know what's interesting, actually? I read this quote, Matt, the other day. Most employers want output without employees. And most employees want to make money without having to generate output, right? Without working. So I'm going to say that again. Most employers want output without having to manage employees. Most employees just want income without having to work or generate output. Right? So like that's very interesting. That when you think about typical business where people are hiring big teams, you always are going to have a conflict. The way I've set it up, it's just very efficient. So the way I manage people is I use outsourcing sites where there's very little emotional connection. I very clearly articulate the tasks that need to be done and they execute.
But with Hale, though, how did you manage your team there?
I hired a Mormon pastor as my COO.
Are you serious? Wow.
That's the answer.
You always have an answer. I'll give you credit on that one. That was pretty good. Okay, good job there. Not bad.
That is my answer. I am good at managing very small, what I call SWAT teams, but once it gets over 4 or 5 people, I just have no patience. They care about promotions and raises. I don't want to think about all that. I want to think about building a business. And so I brought in, again, his name is Chris Rieger. He moved from New York with him and his family down to Blacksburg to help build the business. He was in software and he was a former Mormon pastor. And he had patience like you wouldn't believe. We were opposites. It was great.
Wow. How big was your team when you sold at Hale?
About 20 people.
20. Okay, gotcha. Perfect. And I'm kind of curious, when you sold, though, what was your profitability yearly on your company when you sold? Like not numbers, I mean percent-wise.
Yeah, Matt, I actually don't know that number because we were valued off top-line revenue. I paid very little attention to bottom line because we had raised so much capital. We were always going to be in the red. I actually don't know the answer to that.
Gotcha. Oh, interesting. Doesn't know the answer to that. Okay, I got you there, Nathan. That's good. Perfect.
Yeah, I didn't know it.
Not a problem. Anything else you want to add to the show before we end our show today, Nathan?
I mean, look, I think you guys got it. If you want to connect with me, you can go just search the Top Entrepreneurs podcast on iTunes. As an orange logo, and I'm kind of like this. I look like a Jonas brother, kind of. So check it out there. And look, I'm doing a lot of big things over the next 10 years. I'd love your people to get involved. I'm going to write a best-selling business book next year. I'm going to run and win the presidency in 2036. I'm going to take a company public by the time I turn 30, which is 4 years from now. That'll be fun. I plan to run the world's largest hedge fund with $100 billion in assets under management by the time I turn 45 or 46. So we're doing a lot of very cool stuff. They will happen, my words. And Matthew, I thank you for having me on the show.
It was a pleasure to have you, Nathan. It was great to actually dive in with you on topics and discussions that I don't think weren't actually discussed in other areas. So thank you for having me on the show, Nathan. Guys, check him out on the top on iTunes. Go give him a review. Go listen to his show. It's going to be one that will definitely give you a ton of value and some entertainment along the way. Go to nathanlatka.com. Check out his event coming up, the world's best business show, correct?
Greatest business show on earth. I'm going to light people on fire on stage, figuratively.
Got it, guys. Go check the speaker list there on his website, nathanlatka.com. And guys, thanks again, Nathan. It was an awesome one, guys. Wishing everyone an epic day. Take care, guys.